Well, the US Federal Reserve, due to set interest rates at the end of the month, there's been a lot of discussion about just which direction the dollar goes in. Where the dollar goes, it quite often has its effects felt right the way throughout the financial markets. Joining us now with a look at some of the technical analysis around some of the key markets to trade. We're joined now from TraderNoble.com by Bryan Noble. Bryan, welcome. Good to have you back.
Thank you.
And you come at an interesting time with all what's going on geopolitically and, of course, with the dollar and with the Fed and everything else that's going on in the markets, with recent highs for gold as well at 6-year highs. How are you trading the markets at the moment?
Yeah, it's been a crucial, well, it is going to be a crucial month to see if the ECB and the Fed follow through with rate cuts as promised last month. So we're certainly set up. Obviously, the unemployment figures on Friday have put a small dent in the hopes for a 0.5% rate cut, but I still think the Fed will do a 0.25%. I think if Powell does not do a 0.25% cut, he'll probably be kicked out by Mr. Trump, or there certainly will be a series of nasty tweets going back and forth. So I still expect them to do a 0.25%.
Yeah, we'll take a look at the dollar in just a minute. I know we're going to take a look at the equity markets first of all. One of your big trades is the S&P. We've seen record highs on the equity markets in the States recently. Let's bring up a chart of the S&P first of all, the cash index. With that record high just a touch over the 3,000 level, quite a seminal moment for this benchmark index.
Yeah, for the last 18 months, my target level in the S&P has been 3050 to 3100. So we've basically just shy of it so far at 3,000. Obviously, the higher employment numbers on Friday have put a dent in it. But you know, if you actually go through those numbers on Friday, the average earnings are still very weak, and the employment rate ticked up to 3.7. So I wouldn't be getting as bullish of employment as everybody else. It's still only low-paid jobs are being created, not the high end, as we've seen with Deutsche Bank letting all the people go yesterday, which is not going to help matters. But if we look at the S&P here, we're sold off down to a low overnight of 29.58. There's great support between 29.50 to 58, which is the old breakout. Made new highs up to 3,000. So I think if we can hold the 29.50 to 60 area, which I expect ahead of Powell's testimony to the Hill on Wednesday and Thursday, I think the market should be okay. Should have a bounce back from here.
And you go long?
I am actually long at the moment.
Okay,
so
where's your stop? Where's your stop?
29.48.
Right. Okay. All right. So you're long S&P. What about the Dow? Same sort of story?
Yeah, the Dow kind of has underperformed. It finally, their old high in the Dow was October the 3rd from last year. It only broke it last Thursday when we got up to just over 27,000. We've sold off 300 points since. I think I'm not as bullish as the Dow. I think the Dow 27,200 will be an area I'll be looking to fade if we can get that high. Against that, we really need to break as you can see, the 50 and 100-day moving average are just crossing at just under 26,100. So for people to get bearish to this, we need to break the 26,000 level for me to go short. Another interesting thing is the VIX. The VIX is, it's been very quiet. Even when the Dow was sold off and the S&P was sold off, the VIX hasn't really spiked that much. It closed last night just under 14. So we're seeing very little volatility historically. We bounced off 12 last Thursday. Really to see I think the equity markets crack. You want to see the VIX getting up near the 20 level. And at the moment, I don't think that's going to happen.
Yeah, okay. I mentioned the dollar at the top. You want to take a look at the euro dollar. Yeah. What's your call on the dollar? Because going back to this business about the Fed at the end of the month and this big debate whether it's going to be 25 or whether it's going to be 50, I know some people before the jobs report last week were saying, well, could the Fed deliver a whacking great big cut in interest rates in one go? Didn't seem likely.
No, I don't think so. The other factor here we've got to remember, the biggest influence in the markets at the moment is not just the central banks, it's Trump. So he's laid off the tweeting about the dollar, apart from one comment when Draghi came out and said that they were thinking of cutting rates again at the end of July. Apart from that, he hasn't really said a lot about the dollar, but we know his view is he does not want a strong dollar. And in fairness, whatever Trump has wanted over the last, since he got into power, he's generally got. So even though all the moving averages are pointing down,
this is euro dollar, isn't it? So this is the euro falling against the dollar.
Falling against the dollar. The euro's got really big support between 111 to 111.50. I think it really needs to take out the 111 area before I would get bearish. I'm certainly not selling the euro, despite technically it looks weak, just on the basis that I think he's going to start focusing on a weaker dollar, especially if the Fed only deliver a 0.25% rate cut at the end of this month.
Okay, so the only position you take would be long when it triggers that low point.
Yes. Yes, and the other thing as well, we've got to remember the daily sentiment index is an unbelievable indicator. We'll talk about it in gold in a couple of minutes, but the DSI, when this gets over 90% or gets below 10%, it's over 90, you go against the trend. It's a sell. If it's below 10, you buy the market. At the moment, the euro is around 84% bulls. Is around 12% bearish, I would say. The dollar index is around 84% bulls. So I think one more sell-off in the euro, one more move up in the dollar will certainly trigger the DSI for levels for me to be more comfortable buying the market.
Yeah, okay, all right, that's buying euro dollar. Let me just go on to the gold chart, because you mentioned that, and of course there is this big correlation between gold and the dollar, and as we've seen the dollar rise, so we've seen some air taken out of the tyres of gold. Yeah,
incredible move in gold, 6-year highs. Once we broke the previous high, 13.58, we just shot up literally in a straight line, almost $100 to just shy of 14.50. We've had a double top there at the moment. Interesting, when the second time gold got up to 14.48, the DSI was 94% gold bulls. So again, going back to I think the DSI is the best signal out there when we get above that 90% level. It's a good risk reward to go against the trend. We've seen a nice $55 sell-off in gold since then. What would I do with gold? I'm a buyer between 70 and 80, 1370 to 1380 that is, with a 1357 stop, which is just below the old breakout move higher. I still think gold is not finished. There's too much going on, too much geopolitical risk, I think, and the equities, obviously everybody knows the equities are overvalued. It's like a game of musical chairs. You don't want to be caught standing when this thing starts falling. So I think gold is a buy on dips against that 1350, 60 good support.
Yeah, do you have any idea of the sort of upside? We're talking, I know the other day, listening to some analysts on some of the main business channels talking about 1600. Yeah, there's always someone wanting for a headline, of course.
The funny thing is, when you hear gold going to 1600, everyone gets all excited. That's a huge move. And then you look at Bitcoin. It was the other day it was 9,700. I looked at it, and next thing I looked at was 11,700, and now we're got up to 12.8 overnight. So Bitcoin's moved 3,000 points in 4 days. So I don't think we're going to see the same extent in gold. So
one of the things I know that your subscribers like to hear about is your position with Williams % R. At a future date, I know we're going to be talking about this in some detail. Are you applying it to anything at the moment?
Yeah, if you put up the cable chart there, it's actually working, or should work, or we can demonstrate it here. The Williams % R basically is an index that runs between 0 and 100. So on the green box there, we're down near 0, and then on the wine colour we're up near 100. So if we're up near 100, we're grossly overbought, and we're in down near 0, grossly oversold. This works really well when if you look at the daily Bollinger Band for a particular contract. So here in cable, we can see that the daily Bollinger Band for cable is outside the bottom of the band, and the Williams % R is at minus 96. So on a risk reward basis, I think the hard Brexit is well priced in here. I think any sort of shock or change of tune, you could easily see cable move 2 or 3 big figures. And technically, going by the Williams % R and the Bollinger Band, for me the signal here is setting up to be a nice buy. Cable is at lows for the year. I think, against if we can hold the 124 area, it's probably not a bad bet for a 50 or 60 point risk reward ratio by buying cable here.
Are you actually on a long position at the moment, or are you just waiting for that trigger?
When you pointed out the Williams % R that we're going to talk about today, I'm certainly, when I'm finished this interview, I will certainly buy a bit of cable, probably with a 123.80 stop on that basis.
Okay, all right, we'll get some more details of that next time we meet just after the summer. Bryan, in the meantime, thanks indeed for joining us. That is Bryan Noble from TraderNoble.com. If you want more information from Bryan, just catch up with him on his website.